Today we will talk about one of the factors that continue to challenge the growth of minority businesses is access to capital. I will discuss some of the data from the U.S. Census Bureau survey of business owners, as well as the study Disparities in Capital Access between Minorities and Non-Minorities, which was released last year by our agency. But before I do that, let me tell you a little bit about the agency. Some of you may not be familiar with us, and I'd like you to introduce you to MBDA. You can, next slide. MBDA is the only federal agency which was established to promote the growth and expansion of minority-owned businesses. We serve businesses of all sizes, small, medium, and large, which are minority-owned. On that slide, you can see the ethnic groups that we serve, and these are our clients are from these groups, various groups. Next. Among our services, MBDA provides strategic business consulting to minority-owned businesses. We also facilitate access to capital, which is what we're talking about today, as well as access to procurement opportunities, and we provide assistance in strategic partnering with other firms so our minority businesses can grow to the next size. Next slide, please. We provide these services through business development centers that are located across the nation. We have a network of centers, and they're located, the map shows you where we are. We have a presence of 50 locations across the nation. And in fiscal year 2010, MBDA assisted minority-owned firms in accessing more than $3.9 billion in contracts and financing, and created about 6,400 jobs. MBDA has also a research function, which I manage, and we analyze data on minority businesses to help us develop programs which can better meet the needs of minority-owned firms. As stated before, we analyzed recently some data from the U.S. Census Bureau, the 2007 survey of business owners. We analyzed data on capital usage and found out that challenges in capital access still remain. I will present the highlights of this analysis as well as the highlights of the study that we released last year. Briefly, I'm going to talk a little bit about the barriers to access to capital, which were reported in our study. One of the most significant barriers is lower asset levels. Dr. Fairley and Dr. Roa previously found that access is the most critical factor. And as you see in the chart, minorities, particularly Hispanic and African Americans, tend to have a net worth average which is much, much lower than non-minorities. And this is very important because this is their household net worth average, which is usually used to access loans. They use their equity on in their homes to be able to do that. And just yesterday, I don't know if you saw the news, the Pew Research Center released some data, which is also from the census, which describe what the net worth average is. Which this gap has widened. It used to be about 11 times higher for non-minorities compared to Hispanics, for example, and now it's 18 times larger. The gap between non-minorities and African Americans is 20 times larger. This is very troublesome, and the reason why this gap has widened is because of the housing bubble. A lot of people lost equity in housing, and it's also because the cities that were most affected, we have a lot of minorities living there. This is a troublesome trend for minority entrepreneurs who use housing equity to start their business. Next slide, please. Other barriers include those outlined on the slide. We know that there is, many academics have found that higher loan denials and minorities pay also high interest rates. There also is evidence of lending discrimination. There's difficulty in penetrating networks. There's also discrimination from consumers or other firms which may prefer to do business with non-MBEs. In the area of human capital, we have found barriers in terms of lower education levels and language skills, which may affect minorities who are trying to access capital, as well as lower levels of business ownership experience and family business background. And lastly, limited social networks. So these are some of the barriers to access to capital. And we're going to talk about the data now. In our study, we analyzed data from the survey of business owners. I have most recently updated that data because the census released the 2007 survey of business owners. We also looked at data from the 2003 survey of small business financing. And also, we looked at data from the Kaufman Firm survey and from SBA 7A and 504 loan programs. Next slide, please. Our most recent data from the census shows similar trends as when we released our report. which is we have a story of growth. Minority-owned businesses are growing at a faster rate than non-minority firms. And on all three business measures, this is the number of firms, employment, and gross receipts. In fact, they're growing in employment at a much faster pace, while non-minority firms have decreased their employment levels. The same thing happened in the previous 5-year period between 1997 and 2002. In fact, the employment decreased by 7%. So this is very significant because minority businesses are an engine of employment for minorities, and as you know, unemployment rate is fairly high in the minority communities, and minority businesses are the main doors for a lot of minorities to gain employment. Among all groups of firms, we also found that minority firms that are owned by women, and I know some of you here are going to talk about the Women Business Program, are the fastest growing group among all businesses. Next slide. Despite this huge growth, minority-owned businesses remain smaller than non-minority firms. You can see the average gross receipts on this slide, where male and female minority business owners are much smaller. The size of their firms are much smaller than the non-minority counterparts. Next slide. Analyzing census data, we also found that while both minority and non-minority businesses primarily use their personal savings to start or acquire a business, minorities are more likely to use credit cards than bank loans to raise the additional capital compared to non-minority firms. And you can see it in this chart with the oval. We found a similar trend among firms that were generating $1 million or more in gross receipts. And this trend is troublesome because, as you know, credit cards usually carry higher interest rates. And this is happening at a time that you're starting your business. So we want to see a higher level of usage of other types of capital that are not necessarily in that area. Next slide. When we looked at capital amounts from census data also, we found that minority firms that were generating about $1 million in gross receipts or more needed more capital to start that business in the first place. That's the area you see, compared to non-minorities. We don't know what the reason for this. We need more research, but we can say that maybe because of the lower asset levels that we explained before, or minorities in general need more capital to start their business. Also, it could be a factor of the industry, but it's just interesting that there's a need for more capital for these firms that generated later on $1 million in gross receipts. Next slide. In terms of financing for the expansion of the business, we see similar trends as the ones for starting your own business, which is that minorities tend to use bank loans at much lower rates than non-minorities. We don't know if this is an issue of access, but we certainly believe it is, and the data describes what's being used. Very, very troublesome trend, which is a new data that it was released by the census, is the data point at the top of the chart, which is about stating if you didn't have access to capital. And minorities were more likely to say that they actually didn't have access to capital than non-minorities. These trends also occur among firms that are generating $1 million or more in gross receipts. So this is not only the smaller firms, larger firms experience the same capital challenges. Next slide. Now, from our study on disparities in capital access, of which you have an executive summary on the table if you haven't having a chance to pick up a copy. We also looked at, as I said before, data from the survey on small business financing. And that data revealed a lot of things, very interesting facts in terms of loan denial rates and fears of rejection. Minorities had a higher loan denial rate and also had higher fears of rejection for which they didn't apply for a loan in the first place than non-minorities. And this happens regardless of the size of the firm. We have separated the data between firms that are generating receipts under $500,000 and those that are generating receipts above $500,000. Left and right. I don't know if you can see it from back there, but we see this disparity. Please, next slide. Also, when minorities were able to access loans, these carried higher interest rates than non-minorities. And I should say that this happened even after controlling for a number of variables in terms of business characteristics, gender, and so forth. Please, next slide. Minority firms are also less likely to obtain loans and equity in the first place. And this happened regardless of firm size. And when they obtained loans, back loans, and equity, these were for smaller amounts, as you can see in the chart. The larger the firm, the bigger the disparity in terms of size of loans and equity investments. Now, despite all of these challenges, many academics have studied this and researched that MBAs, in fact, provide a very good investment opportunity for angel investors and all kinds of investors. They are actually sometimes perform even better than mainstream funds. And this may be the case because they're actually underserved. So it's not a fact that they're not performing well, it's that they haven't had the access to the equity that they need. Next slide. These are some of the variables I discussed before that we looked at when we controlled for this, and we still found differences and disparities in terms of capital access between minorities and non-minorities. I just wanted you to be aware of what they were. Next slide. Another troublesome trend is that the disparities in capital access grow over time, over the life cycle of the business. While minority firms, for example, were able to access 82% of the amounts of non-minority firms in the first year of operation, this disparity grew after the second, third, fourth year of operation to 65%. And this is troublesome because these are big firms that are undergoing some expansion, but they are accessing much less capital than their non-minority counterparts. Next slide. Finally, the last thing we looked at was what was the level of capitalization needed to create a job? We were very interested in that question because of all the programs in terms of job creation and the financing. And we found that minorities created a job for every $52,000 in capital, and non-minorities created a job for every $95,000 in capital. So if MBAs had adequate access to capital, these firms could have an even greater impact on job creation. Next slide. In conclusion, disparities in capital access between minorities and non-minority firms continue to persist after controlling for a number of business and business owners' characteristics. Although minority firms continue to grow in number, their average receipts remain a lot smaller compared to their non-minority counterparts. Minority firms had strong job creation patterns, however, capital access challenges are constraining their growth. MBAs were more likely to be denied credit and less likely to apply for loans because of fear their applications would be denied. When they accessed loans, these carried higher interest rates and were for lower amounts. Differences in capital access were prevalent regardless of firm size and grew over time. There is evidence of factors which are contributing to the disparity in capital, but an unexplained gap remains which can be assigned to racial differences and is consistent with discrimination. That's what we found in our study. So we need to be able to find effective solutions to remove barriers to capital access faced by minority firms. Otherwise, minority business will continue to lag behind their non-minority counterparts to the detriment of the national economy and well-being. Thank you. I believe questions will be at the end of the session.